Chapter 7, How to Find Stocks and Build Your Morning Watch List. Intro to Market Scanners. Market scanners will alert you and tell you what the stock price is doing, where it's moving, any news. You get first and foremost information. You can customize them to scan for what you want. If you want low float stocks, high float stocks, if you want to scan for stocks between a certain price range. Just a all around fantastic tool to have. The only thing is you got to pay every monthly for them. The top two in my opinion is Equity Feed and Trade Ideas. These are both fantastic market scanners. Trade Ideas is $100 a month. Equity Feed runs about $200, could go up to $250 depending on what you want with it, if you want OTCs or non-OTCs. Both fantastic. Like I said, you can customize them any way you want to alert you only stocks that are running between $2.50 up to $10. So they'll tell you pre-market news, the volume, and then you can customize them to physically alert you if a stock starts running up during the day, and then you could take action right away. Other free options are Thinkorswim. They have a built-in stock scanner that you could use. Or another one of my favorites is the stockmarketwatch.com. This is a website that I go to that I'll show you later in this DVD each morning before the market opens, and I build my watch list off of this website. It is 100% free, and this is perfect for new day traders. After you've been doing this for a long time, by all means you've got the profits to spend towards an option like Trade Ideas or Equity Feed. But in the meantime, you got to work with what you have. Finviz.com. Finviz is another great one. This one is free, and then you have the option to upgrade your account to unlock a little bit more features. Benzinga Pro. Benzinga Pro is a streaming platform that basically it gets insider access for traders using to make profits. It basically will alert you of any news, any press release or any conference. So it's very similar to as if you're watching. It's almost similar to like a radio for day traders, where it alerts any news. So you could have it playing in the background, and it'll alert something like stock ABCD just released a press release. They have FD approval, and then boom, you hurry up, look it up, and you can take action right away. It's real-time alerts, live. Again, there's a monthly fee for that. Something to consider in the near future. Finviz, as we mentioned before, you can use a market scanner for this, and put your own search information, log in each time with your stored information, so you don't have to go back each and every single time to re-put this information. You go to finviz.com, you create an account, and you could create different scans, so that you have a little drop down, so you could look at one, look at another, and it gives you different results. Another handy desktop application is Twitter. Twitter is absolutely amazing when it comes to day trading. This is another free source to get alerts and watch lists to see what other day traders are watching. You can get pop-up notifications, so there's a lot of day traders, including myself, that will alert stock ABCD is running, just came out with this news, this press release, this FD approval, and you can get notifications straight to your phone or your computer. My best advice is follow all the accounts, top traders, follow everyone. The important traders, just don't follow random people that are social media or whatever, but follow important day traders that make a lot of alerts, and they're basically alerting the stocks, and it's a good guide to see what other traders are watching, the same stocks you are. So like I said, think of it as a concert. You want to go to the same concert that all these other big time day traders are going to, so it's gonna, if they're going there, it's gonna be a good concert. So it's a good way to get it's a nice little way to get alerts on stocks to watch. Building a watch list. This is the most important thing that you have to learn how to do, and I'm going to teach you each and every single morning. When you're building a watch list, you always want to look at the current price. You want to look at the pre-market volume. You want to look at the float, and you want to look at the daily chart at previous support and resistance. So from a pricing standpoint, we want to look at stocks typically between 2 to 250 up to $10 a share. We always want pre-market volume. Pre-market volume is good. That means it has a lot of attention. A lot of people are trading it between buying and selling. The float. The float is how many shares are available to the public for us to trade. The lower the float, the bigger the move it could have. The higher the float, the smaller the move it's going to have, because it's all broken down by supply and demand. The daily chart. You always want to, when you're building your watch list, you always want to look at the chart, the daily chart, to look at previous support and resistance, and look at the past. Be like, okay, is this a former runner? Is it known for making big moves and running? And that's what you want to, basically build your watch list off of. With that being said, I'm going to show you guys right now how I come to the market each and every single morning and build my watch list. Alright guys, I am going to show you how to find stocks to trade each and every single morning in building your watch list. So first and foremost, you're going to want to go to this website called the stockmarketwatch.com. Once you go there, okay, you're going to go to pre-market. Click on pre-market. Alright, you're going to scroll down. Scroll down to the top gaining stocks and the top losing stocks. This is what we want to look at here each and every single morning. 30 minutes before the market opens, we want to come here and look at what's gapping up and what's gapping down. So what's gapping up, we're going to look to short. What's gapping down, we're going to look to long. Now, you can actually apply the strategy towards both. So you could, both short and long these, and you could both short and long these. But typically my strategy revolves around shorting these, longing these, because these are up so much that eventually they're going to crash. And when they crash, that's where I'm going to look to cover my position. So, because they're up so much, when the market opens, I'm going to either look to short them right as soon as the market opens, or wait for them to kind of squeeze up a little bit and short them again. And when they wash out, they dump from everyone taking profits, that's what I'm going to look to cover. And the same with these. They're beaten down so much that eventually when the market opens, they're going to get beaten down more, and then they're going to, basically rip up, basically wake up, come back to life, or they're going to come back to life as soon as the market opens, and that's where I'm going to look to get long. See, a lot of people have it backwards. They're like, all right, well, these are the stocks that are gapping up. They're going to start running. I'm going to look to buy these. No, you already missed your chance. They're already up so much. Why would you buy something that's already up so much, Instead, we look to short these, and vice versa. You wouldn't want to short these because they're down so much. So, like I said, it kind of goes hand in hand, because everything top losing stocks, you could short these, but you have to see what the market does at the open. But we're gonna basically build a watch list. That's first and foremost. So two things here. You're gonna want to go, like I said, you want to go to stockmarketwatch.com, click on pre-market, scroll down, and then you're going to have another tab open called Yahoo, and then go to Yahoo Finance. Okay, so you got both tabs open here. Now, with snipping tool, this is what I use, and I just kind of go like this, okay? And what I do is I basically use my little highlighter, and I highlight the ones I'm looking at. So we'll start by crossing them off first, red pen. So we want to cross out the ones we're not interested in, and that would be anything with low volume. So pre-market, we're looking for pre-market, so that way when the market opens it reacts. So right here, NC, the volume only 802. It's too low for me, not interested. Cross that one off. VHC, nice volume, 57,000 shares. That one will make my watch list, so I'll highlight that one. SRAX 320,000 shares, that will make my watch list. SNCR, it's got good volume, that will make my watch list. RIGL, beautiful, nice volume. So typically I don't want anything, anything like, so like let's jump the gun here. We'll go to VERI. This is too high. $50 a share, not interested. DVAX, $23 a share, only 3,200 shares, not interested. TRN, $35 a share, not interested. ITUS, that one I'm interested in. It's up 11%, almost $3 a share. I like the range, nice volume. That one will make my watch list. ATUS, only 30 shares, not interested. Let's see, 500 shares, not interested. LPX, 6 shares, $30 a share almost, not interested. Let's go back up here. ANY, 350 shares, not interested. VBLT, $6 a share. ABUS, $7 a share. Good pre-market volume. I like those. So basically we have, in a matter of minutes, we were able to look at VHC, ZRX, SNCR, RIGL, VBLT, ABUS, ITUS. So these are the top gaining stocks we're going to look to watch. Now we're going to look at the top losing stocks. So again, let's just cross out the ones that are too high with the price. So, you know, AC 80, $35 a share, don't want it. KT, too high, a little bit too high. It had low volume anyways. BHVN, too high. See, this is just CEV, EI, EIA, MYC, PME. Just, there's no volume there. I can't do it. We need to have volume, guys. MRO, 5,900 shares, not interested. CYBE, not interested. Volume's too low. What is this? UWT, 560,000 shares. That won't make my watch list. Okay. WTI, 10,000 shares, don't want it. MIND, 100 shares, don't want it. IZEA, that one makes my watch list. 300,000 shares, pre-market, I'll take it. And MRCB, 5,000 shares, don't want it. So we have 1, 2, 3, 4, 5, 6, 7, 8. 8 stocks. 8 stocks in my watch list. That's good. That's really good. Now we know we have 8 stocks we're interested in watching. Now we gotta wing them out by the float. So the float again is how many shares available to trade to the public, as we discussed. Float is huge because if it has a really high float, there's not going to be any range. So we want stocks typically under 30 million float. The smaller the float, the more range it's going to have because it's got limited supply and demand, and that's where you get those big squeezes and moves. So pretty much the stockmarketwatch.com, we're done with this website. Now we go to Yahoo Finance, and I like to use this website to tell me the float. So I'll put in the stock for each one, and VHC is the first one, and I'll go to, once I'm here, once I put it in, it's got summary, chart, statistics, profile, finances. I want to see the statistics. I want to see the float. So 50 million shares, it's a little bit more than what I want. I'll hold off on that one for now. Let me see. SRAX, 5 million, 4.47. Boom. That one's number 1. So that one I like. SNCR, 33 million. I'll take that one. RIGL, I just keep doing this. Float, 115 million. Nope. Goodbye. Not interested. VBLT, because sometimes you don't want too big of a watch list. 12 million shares. I'll take that. Typically, I like to have about 3 to 4 stocks I'm watching on my watch list. Anything else, you just kind of feel like a deer in the headlights. You're just kind of like, you're looking all over the place. You're looking at all these different charts and trying to see what's running. It's just too much. ABUS. 28 million. I like it. I'll take it. ITUS. 13 million. Boom. I'll take that one. Let's see. Let's go over here on the top losing stocks. IZEA. Where's the float? 4 million. I'll take that one. So let's see, what was that? UWT. What is a float? See, it's not even telling me here on Yahoo Finance, so that makes me very scared and curious. Why are you not telling me the float? Well, you're not on my watch list. So let's go back to VHC. That one was the one where it's like 50 million shares. 58,000 shares pre-market. I don't really, not really liking that. Yeah, I'll cross that one off. So, with that being said, we have our watch list. We're going to be watching SRAX, SNCR, VBLT, ABUS, ITUS, and IZEA. So we're watching 1, 2, 3, 4, 5, 6 stocks at the open. And that, my friends, is how I build my watch list each and every single morning and find the stocks to trade. And that is how you can do it each day as well for free. So like I said, the stockmarketwatch.com, awesome website, and also offers after hours. So also tells you what ran, the top gaining stocks after hours, you know, the top losing stocks after hours. So you could also make your nightly watch list off of this. So the same routine we did with all the pre-market stocks, you could do that, and that way you kind of already have a watch list in the morning from all the stocks that ran after hours. But yeah, that's it, guys. That's how you build your watch list each and every single morning. What's up, guys? This is chapter 8, long bias trader. So with being a long bias trader, the goal is to buy the dip, sell the rip. Okay, too many new traders come to the market and they see a stock ripping and they always buy at the top, and you don't want to do that. That's pretty much how you always get dumped on. So my favorite saying is buy the dip, sell the rip. Morning washout trades. So morning washout trades are my favorite kind of plays. What we're looking for is a gap down, large pre-market volume, low float. What are they and how to identify them? Just because it meets my search doesn't make it a good long. There always has to be volume, lots of volume. Volume is action. So there has to be volume, to go along with that stock before I actually can place the trade. Morning washouts. So momentum starts right when the market opened. That's basically, think of like doors to a concert. That's when they open the floodgates and everyone comes pouring in. So I'm, from a morning washout standpoint play, long bias, you want to look for speed. Now when I say speed, you want to look at the tape, the time in sales. It will display the speed. Key magnet areas are whole numbers and $half marks. Many times whole numbers cross and then they consolidate. Morning washout. So normally see an overnight profit taking at the market open. So a lot of bag holders will hold their positions overnight and they'll look to take their profits right when the market opens the following day. You have to use an educated risk based off whole and $half numbers. So again, my core strategy revolves around whole and $half numbers. People they flock to those because they're magnet areas. So, emotions play a big factor with that. Goal is weak open and washout, long into the panic with an educated risk. It's the opposite of a gap up parabolic, okay? So you're basically buying the dip. So you're looking for the stock to crash. And, you're looking to, hoping for a gap down in a panic instead. Longing green to red, another favorite play. So in order to do this, the stock must be in play prior days. So the more audience, think of it as like a concert, a big crowd, the better. Again, this strategy works best with whole and $half number marks. It gives people a point to buy. So it gives everyone, all traders a good entry and exit to buy. Again, just whole and $half numbers are key magnet areas. typically has a big washout. Okay, these long and green to red areas, they consist of a washout play. So the whole strategy is buy the dip, sell the rip. Taking advantage of mooring and motion. Typically, I scalp these trades. Okay, this doesn't mean the stock can't go lower. Again, you never want to marry the trade. You're just going to date the trade. So you always have to look at the daily chart. The daily chart will show you previous support and resistance as a guide. If there's any kind of slow grind, you have to be, you usually want to get out. Any kind of grinding, we don't like grinding actions. We want, up and down, very fast speeds, up and down, up and down, up and down. Like I said, any kind of grind, just get out, cut your loss right there. The chase. So a lot of people ask me, do I chase a stock? And I do at times, but you need to know when is it okay, from a longing standpoint. You want to, but it's running away from you. A lot of times, traders they'll be hesitant to get in the stock, and then keep going. They're like, oh, I should have got in. Sometimes there's pops, but there's no pullback. You have to again look at the daily chart at the support and resistance as a guide. Never go full size. So you always should have a chase size, and a chase size should usually be like a quarter of what you would normally trade. So if you're typically like to trade 500 shares, do 250 shares. That way, if you're wrong, it's not that big of a loss. You could always add. Scalp it. Don't get dumped on. So let's look at some charts here. So like ZN, this ticker, as you can see, this is a daily chart. And when the market opened, it just squeezed up, okay? And then it had this big washout. So if you had missed this entry, if you missed this whole move, it's okay. Wait for the dump. Wait for the dump to happen, and then long that, and then sell quick into the pop. So again, if you were to draw a line across right here, the 250 is a half number. So these are magnet areas. Okay, it was trying to make its way at a high of 285 this day, but right here holding support would have been a good entry from a long standpoint. And after the rest of the day, it is kind of consolidated and faded off. This is SCVL, another stock I traded. This was a higher price stock. This one was $20. This was trading at around $20, and the market opened. It squeezed up. I missed it. It washed out, came all the way down, held support at 1911, two times. When it held support the second time, that would have been a good, if you missed this first dump, the second one would have been a perfect buy, too long, and then you could have rolled this all the way up, okay? But again, you have to watch the time and sales and level too, but this was a perfect entry right here. And here's a daily chart. So it's SCVL, the 1 minute chart, and here's a daily chart. You can see that it gapped up. So it gapped up that day and then squeezed up. And then it came washed out down and then just ripped back up. INSM. This one, when the market opened, it squeezed up. Okay? So this would have been a perfect chase. This would have been a perfect chase at the $half mark. So this at 26.50, you could have bought it. And look, it just blew right past 27.50. It went to $27, and then it washed out, and then it squeezed back up. So this one, again, whole and $half numbers would have been a good entry to buy at the $half mark. FSNN. So this one would have been a perfect entry right here. The high of day broke this, so you could have bought right here to break this previous resistance, longed it, sold it right into the pop. Okay, so this is right here would be a good breakout buy right here if you drew a line right across. So let's say the stock tanked, so the market opened, stock tanked, you draw a line right across here and you look to long for this break and squeeze up and sell right into the pop. Don't get greedy. Don't think it's going to keep going higher. Just sell your position. This is what I did, and took my profits and I ran. And yeah, it came down a little bit and then it kept squeezing up, but that's okay because no one ever went broke, taking profits quick. SNCR, another perfect example. This one, the market opened, it washed out. You could have bought the dip, sold the rip. And if you drew a line right across here, say if you missed this washout entry, you drew a line right across from your previous highs. You could have longed right here. So if you could have bought your shares right here for the break of this, and it popped up a little bit, you could have sold. But if you held for a little bit of a pullback, it ended up ripping up even higher. So you could have traded this two different ways. Like I said, you could have bought the dip, sold the rip, or bought the breakout and sold the pop. But like I said, right here it did pull back a little bit. So if you had bought the breakout, it pulled back a little bit. Your position will be down a little bit, but if you have a good stop and good risk to reward, this trade you would have been okay holding. TROV. So I'm hoping you guys are seeing the pattern with this. TROV, SNCR, FSNN. How in the morning all the action happens, and then later on the day, just it gets real thin, real choppy. See, morning action, real thin, real choppy. Morning action, real thin, real choppy. So TROV was another play. Market open, red candle, big red candle, tanked, bought the dip. Look at that, big rip, right back up. Bought the dip, sold the rip. If you drew a line right across here, you could have bought the breakout and sold into the rip. Same thing right here. So this high of 124, draw the line across, the stock ended up washing all the way down, okay, and then ended up ripping and squeezing all the way back up. So if you missed this washout dip buy, you could have easily just bought the break of 124 and sold it really quick into the pop. Beautiful trade right here. So let's review some live examples. Alright, we're going to review some live charts together. This is for long buys trading. Now, this stock is BONT. This one pre-market was uptrending. Okay, you could see it clearly had a low of 0.78, and pre-market it was uptrending. And I was watching this thing because I always mark out my whole $1.50 number. So right here, this is $1, and $1.50 is actually way up there. Let me bring this in here just like this. Okay, so see the prior day, 3 days ago, it was at a high of 135, but my main target area was 150. But it didn't even actually. Let's see. Let's look at the. You always gotta look at the yearly chart. See, so 150, $2. So as you can see in the past, 150 acted as a resistance. $1. It's a main key area. But we had a long way to go before we get to that $1.50 mark. But with that being said, I was watching this thing pre-market, and you can see it was uptrending. And when the market opened, look what happened. It just dumped, had a big washout. Now, perfect trade right here. Washed out. You had a double bottom, okay? Double bottom. You bought the dip. Watch the level 2 time and sales. Wait for it to slow down. And look, it just ripped right up. Now, two ways you could have traded this. One, you could have bought the dip, sold the rip. Or you could have bought this on that break right here of 0.99. So it was confirming it failed this pre-market, it washed out. You could have bought the dip, or you could have bought right here for the $1 breakout and sold right there into the spike. You would made yourself 18 cents. Okay, so you bought 1,000 shares, you would have made yourself 180 bucks. You bought 10,000 shares, $1,800. That's pretty good for an easy trade, perfect, beautiful setup. So this is a just all around fantastic, beautiful trade that you can't go wrong for buying the breakout or buying the dip, selling the rip. TYHT. This one popped up on my scanner. Okay, this one was a beautiful chart setup as well. But the problem with this one is that this one, there really wasn't a dip. So this is where chasing would be okay, because there was no, looking at each candle, there was really no ever pullback. It just kept squeezing up. So this is where you apply the $1.50 marks. Okay, so you look at your chart really quick, look at $3.50, $4, $4.50, and this one you could easily long $3.50 with your risk off at $3.45 mark. Okay, and then it squeezed up, and you could have longed it again at $4. Okay, now remember, we're not looking to ride it from $4 up to $5. We're just looking to basically take those quick pops, those quick scalp trades. So in this case, you wouldn't buy the dip, sell the rip. You just basically be longing it for the break of $1.50 numbers and selling into that quick pop. Sure, if you would have bought at $3.50, went up and you sold right here, $3.67. That's still 17 cents. That's still pretty good. I mean, but don't kick yourself, in the rear end, because, in case it does ever keep going and going, it happens. It's very, very common. But because when you long stocks, you need fuel. Fuel is more buyers to step up to the base. So you always, want to hope that when you long a stock, more people behind you are looking to buy the stock as well to push it up. Versus shorting will always go down. If you short a stock, that always goes down, because there's not many, you don't need anyone to buy the stock. People that are holding these things they're bag holders. They're basically just selling off. So, but right here again, $1.50 numbers. You see it breached $3.50. It breached $4. Was trying to push that $4.50 area, couldn't quite make it that far, and then just faded off the rest of the day. So this, perfect trade. This is where a chase would be okay. AMMA. This chart example, you can see it squeezed up to 198, pulled down, consolidated right here. As you see right here, 198, broke that $2 mark, squeezed up. If you missed it, that was okay. You bought waited for the pullback confirmation right here. Could have bought this breakout of 211. So you could have bought right here 198, pullback, consolidate. You could have bought the breakout right here. Could have bought the breakout right here, 210. If you bought right here at 210, squeeze all the way up to 238. So that's a nice little 28-cent profit right there. 1,000 shares. That's not bad at all. Beautiful trade right here from a long standpoint. You always gotta buy these like breakouts. So with as always, longing stocks, you could have bought this washout here off this previous. So where it acted as resistance, it became support. Okay, so you could have bought the dip and sold this giant rip, or you could have bought the breakout. Regardless, they both went up. NETE. This one here came out with news, and as you can see, it squeezed up, opened at 545, went to 596, squeezed straight up, and then it washed out. It was kind of choppy, so I mean, you could have jumped in here for that push back over 596, but then it's kind of choppy. The volume didn't really stick that much, but then the volume poured in, so you could have drew your line across 596 across the board and look to buy that confirmed breakout if it would breach that area again, and that's exactly what happened. Put an order out there at 596, and it squeezed all the way up to 625. So that's a quick profit right there to take a couple $100 depending on your share size, or even $100 if you win 1,000 shares. So again, look for that high a day confirmed breakout, and you're right around that whole dollar mark of $6. So we're just a couple cents shy of $6, which is a magnet area, and it's going to pull towards that area, and that's going to be your confirmed breakout. HMNY. This one is notorious for being a former runner, and on this day, this one we traded with a breakout of 1630. Okay, so as you can see, it squeezed up, pulled back, and it was acting 1630 was acting as resistance 1, 2, 3, 4 times before finally it squeezed right up. I had my order out here. I bought, sold right there into the quick squeeze. Went from 1630 up to 1685. I got out, pulled back. I thought it would grind back down, and then nope, look, at the 1685 acted as resistance. Finally the volume came through here again. I bought it again for that breakout, that previous high day, that current high day breakout. So you want to look for the high day breakout. So 1630 was a high day breakout. Once it broke there, it squeezed up. 1685 became the high day breakout. And then this candle right here broke that resistance, and then it squeezed up more. And then this became the high day right here, 1750, pulled back. And this candle right here, yeah, it closed red, but this one finally broke 1750 right there, guys. Look at that $half mark. Okay, it's a $half mark. Magnet area broke that. It went all the way up to just let's look at this candle here. Had a high of 1794, so it's trying to get up to $18. That magnet area. It finally faded off the rest of the day because it basically ran out of fuel. Okay, so you know, long buys trading, you want to look to either buy the previous breakout, the high day breakout, or wait for the washout, buy the dip, sell the rip. Look at this, squeezed up again, washed out, buy the dip, sell the rip. Squeezed up again, buy the dip, sell the rip. So, you know, it's really easy to, you know, recognize these patterns once someone physically shows you how I'm showing you here live, you know, how to long these stocks. And you know, this pattern, you can see it worked right here. 1, 2, 3 times. It worked 3 times. You could do this. You could have traded this 3 different times, and it just repeated itself over and over again. But yeah, that's a beautiful trade, beautiful setup right there, guys. SKLN, perfect example of a chase trade. This one just went straight up. There was no room for pulling back. Okay, you see a nice big long green candle. So this one would have been a perfect long for the whole dollar number of $2. But as you can see, it had a lot of fuel just shooting straight up. It's one thing if it was grinding up, but this one just shot straight up. So with this one, you'd look to long at $2, and in this case, you would have to sell it fast. You'd have to watch a level 2 because you can see one up to 205, and then this candle here, it went up to high of 213 before finally it faded off the rest of the day. So you know, when it came back down to 173. So with that being said, you know, this is where hotkeys come into play. So as you know, as you saw in my previous chapter about setting up hotkeys, some people have a hard time getting in and out of a trade so fast. This is where the hotkeys come into play. Okay, so as it's going up, you hit your hotkey. I'll reprogram it, F1, F2. Say you hit F1 to instantly buy 1,000 shares. And you see it squeezing up, and you hit that same hotkey F2 to sell 1,000 shares. You know, that's a quick $50 right there. That's that's pretty good. Sure, it could go higher, or sure, it could you know, tank afterwards. But that comes into watching the level 2, like I showed you in the previous chapter, of seeing the buyers. More buyers on the bid and less sellers on the ask is what you want. You want to see a lot of green prints going through the tape and see that squeeze up. If you start, you know, if you buy here and you see it's going up, and you don't see that many buyers, you start seeing some red prints and more sellers, it's time to get out. To use that hotkey and get out. MYOS. This one came up on our scanner pre-market watch list as well as the scanner. This one was trading nice, uptrending pre-market. You can see the gray area here is the pre-market. So I was looking for this thing to obviously get over, you know, the pre-market high of 238, possibly get up to 250. Looking at the daily chart, you could see that it's made some big moves. It's known for being a former runner. Look at that. This one day, it opened at 130 at a high of 698. So you could see it's right here, big move, big move, big move. All these green candles, big moves, big. This was a big move, but it closed red. Just crazy former runner here. But as you can see right here, this one pre-market, it washed out, so it failed right here. Okay, $2, it dumped, and you can see finally it washed out. Finally it hit a double bottom right here, so it held support twice right here. Buy for the high of this previous red candle right here. So you could have bought the washout, bought the dip, and sold into the rip. back up to $2. And right here, so that was the high right there. So pre-market, the daily high currently was this candle right here. As you can see, later on that day, a couple minutes later, it finally broke that. So you could set your new target to long for the high of day 215 right there, and then it squeezed all the way up to 235, close to that pre-market high of day, which was acting as resistance. So that first washout long about the dip, sold right into the rip, or if that wasn't good enough for you, you could wait to buy for the high of day breakout, which was 215. Had your order out there ready to buy, and have your order out there ready to sell right away into that squeeze up. So again, perfect setup. You could have traded buying the dip, selling the rip, or longing the breakout. LBIX. This is a perfect scalp. Okay, so you could trade this one two different ways. One, you could have just pretty much chased it, because you could see it just you know, followed the VWAP line all the way up. It was just uptrending the whole time. So you could have easily just you know, chase this one, but at some point eventually this would be the front end of the move. Eventually you're going to get, you know, this would be like the back end of the move. So front end, back end. So think of it like a roller coaster. You know, the roller coaster's going up, going up, going up, going up, going up, and all of a sudden just it comes all the way down. Sometimes, like I said, stocks just shoot straight up and then they come back down. So but this one right here, you could have treated on the way up. You could have bought the breakout of each previous high. So this one right here, it went up here, 227. You could have bought the breakout right here. Went from 227 to 230. It's a quick scalp, but you're risking it based off of the 227 mark. But as you see, it did drop down to 224. So you can give yourself a little bit of wiggle room with that one. But this one, you know, there was just really no pullback. I mean, it just kept squeezing out. You know, it go up a little bit, come down. And see, the problem is that too many traders, they stop out quick. So you gotta give the room, you know, the stock room to play. Because let's say if someone, you know, the stock went up and they're like, all right, I'm gonna long this thing for 240. It's obviously trying to go towards the magnet area of 250. So let's say the stock squeezes up, you miss it, it starts going up, you're like, all right, I'm along right here. For the break of 240, it goes up to 246, pulls down. Say you cut it off and take the loss, and then look what happens this candle. It rips up, and then it kind of continued going up. So as you stopped out right here, you're kind of kicking yourself in the ass. But if you notice that when this one went up and pulled down, it held support at what was once the previous resistance. Okay, so you have to pay attention to that. You have to, as the stock's moving, you have to draw your horizontal lines as well as your trend lines, and just pay very close attention to how it's behaving, how it's moving. And you can see that there's a lot of buyers coming in here. So, you know, we're just not watching the chart, we're also watching the level 2 and time and sales. That is very, very important. So, you know, just beautiful chart set up right here. You know, long buys, chase it. It would have worked buying the, you know, you could try and buy the little pullbacks, buying the dip and selling the quick rip. But just overall, you know, this is what we look for each and every single day in the stock market. Nice clean stocks that just grind up, you know, get some nice squeeze pushes, and execute them accordingly. But yeah, that's it for this chapter, guys. I hope that helps you from being a long bias trader. The next chapter will be my favorite, which will be short selling, where I, you know, successfully make 90% of my success trades and wins short selling. All right, see you in the next chapter. Chapter 9, Short Bias Trader. This is the kind of trader I am. I am 100% short bias. Shorting is my favorite strategy, and in this chapter we are going to go over my strategy that I apply day in and day out to the market. So, my favorite saying with shorting is short the pop and cover the drop. That's it. We don't short. I don't short the breakdowns. I don't short at the bottom. I short at the very, very top. And 9 out of 10 times I top ticket. I get it right at the very top, right on the money. And again, my strategy revolves around whole and half dollar numbers, and we will review that in charts we review later on. So, morning parabolic. What I'm looking for stocks that gap up. Okay, so I get that off my pre-market scanner. I want large pre-market volume. Okay, the stock has got to be low float. So again, we're looking for low float stocks with volume. What are they and how to identify them? We're going to review in this chapter. Just because it meets my search doesn't make it a good short. Just like a long bias trader, we have to identify this. And again, there has to be volume to come along with it. So again, it's like a concert. Just because you have a concert doesn't mean it's going to be a good concert unless you have people, audience, which is volume. Morning washout parabolics. So again, momentum starts at the open. They open the floodgates, everyone comes pouring in. We always want to look for speed. Speed equals time in sales. The time in sales, the tape will display the speed. That's why we have to always watch the time in sales in level 2, because it displays the speed, tells us are there buyers stepping up, are there sellers stepping up. Whole and half dollar numbers, always my key mark areas that I draw out on the chart. Many times whole numbers cross, but pull back, consolidate, then they wash out. Okay. Shorting a red to green play. So again, like long bias traders, going from green to red, but instead we're shorting from red to green. The stock must be in play prior days. More audience, the better. It's best with half and whole dollar number marks. Again, everything revolves around whole and half dollar number marks, because these are key areas in the stock market that people are drawn to, big magnet areas. Typically we'll have a big surge when we're around the red to green move or green to red move. You know, always short the pop and cover the drop. Don't ever get greedy. Don't ever short, and then try to, you know, cover lower, you know, and just don't be a trend trader. Okay. So taking advantage of morning emotion. Again, I only trade the first like hour of the stock market because that's when all the morning emotion happens. I typically scalp my trades. But again, you know, with being a short bias trader, this doesn't mean the stock can't go higher, because it can always turn around. At the end of the day, no one knows where the stock's going to go. It can go up, down, left, right. No one knows. Not even Warren Buffett knows where the stock price is going to go. We never want to date the stock. We just want to trade. You know, we never want to marry the stock. We just want to date the stock. They're like trading vehicles. We're just going to take them for a test drive for the day, and that's it. A good indicator to use from a shorting standpoint is, you know, past resistant levels as a guide. Like, okay, looking at the daily chart, what's the highest it's went to before it tanked? And you have those resistant lines drawn out to use as a guide. Grinding, we never short grinds. I never short grinds. So it's either up, down, big shooting star moves. Never grind consolidations. If that happens, I instantly get out. Okay, because otherwise you just get caught in the grind, and the longer you're in the grind, the more you're thinking, should I get out? Should I stay in? Should I get out? You're just thinking too much. That's when emotions start playing in play. So let's review some past charts together that I traded. First one is VSTM. So this was a perfect play, okay, because here's why. You can see 550 is a half dollar number, magnet area. The market opened, and guess what happened? It just tanked. So when the market opened, so remember the candle opened right here at the top, and this would be a perfect short entry, just a short into the half dollar mark, and then it went all the way down to 525. Okay, and then you could have covered right there. So if you shorted at 550, 1,000 shares, and you cover at 525, it's 250 bucks. That's pretty in less than a minute. That's really good. I mean, that's really good. But if you held longer, say you took half your position and then you just let the rest of it grind down. I mean, look, it went from 550 all the way down to like 485. That's huge. So this would be a perfect short entry. LINU. So with this one was a short that I took. Actually, I was watching it at 250. Okay. 250 was a magnet area, and I was looking to short this at 250. I already had my order out there to short 10,000 shares at 250, and I saw it grinding up. I saw it squeeze up, and then I saw it grind up, and my order, I was like, I saw the level 2 in time and sales, and I'm like, all right, this thing's not getting, you know, it's not pushing up to 250. So you saw the double top right here. I saw the double top, and I shorted right here, and then I covered quick into the washout. So another perfect trade. Magnet area, it was pulling towards the 250 level, but it started to lose the buyers, because you got to remember, all the buyers, these are all buyers right here, they ran out of exhaustion. So think of it like a car, like a race car. You know, they're cruising, and eventually they just ran out of fuel. And then when they ran out of fuel, that's when I took advantage. I shorted and covered into the wash. Again, you never want to get greedy. You know, if you shorted at the top, basically cherry picked it, and it comes down, you're up a couple $100 in profits. Why not take them? Because they could easily turn around, grind up, and just blow past your initial entry. And you're like, well, I should have took it when I had it. So sometimes it's best to take the profits quick. Here's an overextended daily chart. So this would have been a perfect short. This is a daily chart of WTI that for 1, 2, 3, 4, 5, 6, 7 days it was green. It just kept, each day kept going higher and higher and higher. So as you can see, the high of the daily chart was 347. Think to yourself, hey, that's pretty close to that 350 $half magnet mark, right? So watching this one, the perfect short on this one on the daily chart would be 350. Have your order out there at 350, and then look to short that and cover into the quick washout. FINL 1 minute chart. This was a beautiful trade. This was an end of day trade that I took. It came out with news, and it went from basically 1050 up to 1240, and this thing just squeezed up, and I missed the $12 mark. So as you can see here, I had drawn out my $11.50, $12, $12.50, using those half and whole dollar numbers as magnet areas. It blew. Look at this. It blew through $11.50, which is fine, okay? But at $12, exactly $12, this 1 minute candle, it failed and pulled all the way back down to $12.75. So again, that's a 25-cent drop. If you shorted $1,000 covered, that's a quick $250. But I actually, so this one here, this one I shorted $12, and right here this candle, and when it blew past, it was making its way to $12.50. I was looking to add again. At that point, it just ran out of exhaustion, and it just pulled down. And look, it held support 1, 2, 3, 4 times. It held support at $11.50. So if you were a long bias trader, it would have been good to dip buy off $11.50. But like I said, I started $12, it squeezed up $12.40, and then it came down, and I basically covered. 12.60 is when I covered it. But now if you look at FINL, this one's just down. This one's just done. It's done. As you see, the daily chart, you can see 1250 was another key area. So I had $11.50, $12, $12.50. As you can see in the past, 1, 2, 3, 4. It was acting as support multiple times. So I was thinking that this one would be resistance. And like I said, it didn't even make it there. It didn't even make it there that day. But you always have to look at the daily chart to see what it did in the past to predict the future move. CRZO, 1 minute chart. So this one I didn't trade this one. I didn't like this because again, it was grinding up. I don't like these grind up moves. But perfect example is that you could see here it had a high of $13.99. Again, it was the magnet area. It was like pulling like a magnet to that $14 area, which would have been a beautiful short. But sometimes you don't always want to have your order out there exactly that whole or $half number. You want to have like 2 to 3 cents before that number. So like if I did short this one, I would have put my order out there at like $13.97, just so it did get filled. Because see, in this case, it didn't even hit $14. It went to $13.99, and then it just faded down the rest of the day to $13.44. So like even if you short 500 bucks or 500 shares, this is still a pretty nice trade if you could hold through all this. See, my strategy and the kind of trader I am, I can't sit there and hold, this whole time, the whole day. It's just not the way I work. But I wanted to show you guys this chart and basically how these whole and half dollar numbers are always magnet areas. As you can see, the daily chart, basically how, like I said, if you go back, I drew out here $14, and then how you can see in the past, how it basically failed there. 1, 2, 3, 4, 5, 6, 7 times. 7 times it just kept kissing and kissing and kissing and kissing and kissing. It pulled back, it pulled back, it pulled back. It could never breach this area to grind back up because that was a main area. There's no buyer step up to the plate. So that's exactly how I was treating it. But I wanted a big squeeze up. I wanted a big squeeze up, but it wasn't doing it. It was grinding up. I'm like, I can't trade these grinders. So this is a daily chart. CBIO. This one, again, I saw it squeezing up. I shorted 450, half dollar mark. Went to 474, looking to add at $5. It kept going, but it ran out of fuel, ran out of buyers. And short at 450, I was down 24 cents, but that's okay because, it made its move. If I had shorted at 350, oh my God, that would have been way down here. So if I even short at $4, it's just, that's not, that's just, it hasn't made that much of a move yet. When you see these big green candles come in, that's what we're looking for. As short buyers, traders, we're looking for these big green candles. And like I said, shorted at 450, went to 474, and then just dumped and just kind of grinded back down. And this one I got like a little 10-cent profit, but nothing crazy, BCRX. This one, when the market opened, I was looking for a squeeze up, but just there was really no follow through. And like I said, just this thing. This is where watching the level 2 and the time and sales comes in, where it's been good to watch the tape, and I saw a lot of buyers step up to this. So in this one, this would have been a perfect trade just to slam the bid. And when I say slam the bid, you're just shorting the bid, instantly selling it to buyers, and then just riding the stock all the way down. Because there's just no bounce with this one. This one was just a falling knife. It just kept going down, 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 down. So wherever you got in, you would have ended up with profits. But yeah, that was a beautiful setup, beautiful trade. FNJN. So this trade I took, again, I shorted at $4. Half number was a magnet area. It squeezed up, shorted at $4. Okay, and then this candle here, it pulled back all the way down to a low of almost like 482. It was like 482. It pulled back. So that's a little 18 cent profit right there that I took. Again, a lot of times when you see these whole and half dollar numbers, there are 9 out of 10 times it will go a little bit past. It will go a little bit past. It'll test it, and then it'll wash out. And look, it happened twice. 1, 2. So here again, say if it went up, squeezed up, you could short again at $4, short the pop, cover the drop. DRYS. This one is a very tricky trade. This one's just been a downtrending piece of shit for months. That you could short this thing wherever, and you're always going to end up with some sort of profit. But as you see here, the 350 was a key area from a support / resistance area where it was consolidating, where this would have been a beautiful short from a downside standpoint. And you can see if you shorted this little pop up into the 350, it just faded down the rest of the day, and it had a low of 287. So some 350, 287, beautiful short entry. Like I said, key areas, whole and half dollar numbers. DMPI. This one again, I shorted at 250 half-dollar mark, went up to 273, and I was looking to add at $3. It just couldn't make it there, and it ended up washing out and just grinding down the rest of the day. Right, I ended up with nice profits on this one. So again, whole and half-dollar numbers, key areas. So my strategy, I like to call it the M3 strategy, which means 3-minute rule. 3-minute rule, I'm looking for bullet up moves. So bullet up, big squeeze ups. Okay, so when I say 3-minute rule, that means I'm in and out of stock within 3 minutes. If it's anything longer than 3 minutes, that's it. I have to cut it off, whether I'm up my position or down my position. It's a 3-minute rule. Whole and half-dollar magnet areas. It revolves around. So whole, half-dollar numbers are always key areas you want to look for. Always scale in at the half and whole dollar numbers. So back to DMPI, I didn't go full size at 250. I went quarter size. So I shorted 2,500 shares, and then if it went to $3, I would have shorted another 2,500 shares. I'm not going to short more shares. I want to short the same amount of shares, so that would give me exactly a 275 average. Okay. You know, again, I'd be adding again at the next half or whole dollar number. That way you have a better average in a 3-minute window. Okay. Now let's review some live examples together, shall we? BLFS. This was a beautiful short position that I ended up taking. As you can see, it had a high of 753. Pre-market, it was grinding. It was a little bit trading thin pre-market, but it gapped up to the prior day. It had a high of 715, and when the market opened, I was hoping it would squeeze right to 750, where I'd look to short it. I'd start a scale position of 2,500 shares, possibly 5,000 shares. But as you see, as the market opened, it just kind of like washed out down, just kind of like downtrended down, and then it kind of like, you know, grinded back up, did a little curl, and it was pushing its way back up to the high day, which was pre-market high day, which was 715. As you could see, this would have been a perfect long entry if you were long in this stock, but because I'm a mainly a short bias trader, I had my order out there already at 750. So I already have the order out there just sitting there. I don't have to use a hotkey for this. I just automatically put the order out there and let it do its thing and squeeze up. Excuse me. As you can see, it squeezed up, had a high of 753. I got filled at 750, and then it tanked down. It washed out all the way back down to 715, where I actually ended up taking my profits at 717 on this one. You know, went up a little bit, consolidated. These consolidation moves I can't do. I get bored very fast, and my mind starts playing games with me. But as you can see, it washed out down back to 715, where it tried to hold support before grinding back, washing out again, consolidating, grinding down. And the rest of the day it just went down. But beautiful trade, like I said. 750 half-dollar number, key magnet area, went right to there. And then like I said, it just had my order out there, got filled, washed out, covered right away. Short the pop, cover the drop. Beautiful, easy trade. Couldn't ask for a better entry and exit. As you can see on the daily chart, that the 750 was a high a day, that this thing was just grinding up. And as you could see here, $5, $5.50, $6. So as you see right here, $5, right here was a big magnet area. 1, 2, 3, 4, 5, 6 days, 6 days, and that's right here it finally squeezed up and broke. And yeah, like I said, just always gotta watch for those whole and half-dollar numbers, as they're always going to be key areas. In this day, it played out real well for me, where I shorted at exactly 750, and it's eventually going to work its way back down to no man's land, like they all do. But going back to the 1-minute chart here. Oh, let's see here. We went a little bit far ahead of ourselves, but there we go. But like I said, as you can see here, you just gotta be patient with the trade. And if it kept squeezing, if it had been going to $8, I would have looked to add again at 8, but I wouldn't add between 7.50 and 8. Then my next order would be exactly at $8, where I would short again the exact amount of shares I shorted at 7.50, and that would give me a 7.75 average. And within that 3-minute M3 window that I call, it would have made that move. So within 3 minutes, if it didn't give me the move I wanted, I would be out. So you always got to count the candles: 1 minute, 2 minutes. You always want to look at the 1 minute chart. So like I said, in this case, went up, squeezed up, pulled back a little bit, went up, then right here I got in. I instantly got filled. I count that. So 1, 2, 3 candles. By the third candle, I'm already out. Okay, so right there, your little 3-minute window. 1, 2, 3, and then I'm out. Now, like I said, within this 3-minute window, if it started consolidating or started grinding up, it's past 3 minutes, I'm out. I'm done. So, basically, as I say on Twitter or any of my other social media feeds, it's pretty much a nail and a bail. That's it. Nail and bail, I'm done for the day. So just all around beautiful, perfect trade. IMMY. This stock came up on my scanner. I started ripping up, and I saw it right after it blew past $2, and I was like, okay, it's blowing past $2. It's working its way up to $2.25. I'm gonna look to short this thing at $2.50. Again, $half number. I put my order out there at $2.50 of 5,000 shares. It squeezed up to a high this candle, which was $2.58. Okay, so went up to $2.58. So I was down about 8 cents. No big deal. So I got filled. As soon as it washed out, I covered at $2.30. Of course, I could have been a little bit more patient with the trade, but I saw this consolidation right here. So I basically saw it was holding it basically had a resistance right here at 240, so I thought it was going to hold support there and grind its way back up to $3, which later on it did pull back and it went back up again, and it was consolidating here, and just the rest of the day was pretty much consolidating. So like I said, I shorted at 250, and if I didn't cover, it came down right here, and I was hoping that this thing would come back to $2, and it basically squeezed up or turned back around. At this point, I would have been nervous because I'm like, all right, well, I shorted at 250. I was, I could have took my profits down here in the 219, 220 area, and now it's squeezed back up, and now I'm upside down again. So you don't want to be in the trade this long, because like I said, your mind will start playing games with you. The best thing to do is, if you're short, stick to your plan, stick to your rules. Short 250, cover at the cover at the wash, cover at the drop, and nail and bail and get out. So for those that if you did short early, so say if you shorted 1,000 shares here at $2, my next entry, so say if I shorted 1,000 shares at $2, my next entry I wouldn't add again to about 250, because that would give me a 225 average. So once I added at 250, I have a 3-minute window before I basically have to bail, which in that case was 1, 2, 3. So right there, I could have covered for at least break even, or about a like a 2 to 3 cent profit. Yeah, pretty much just let's see here, that had a low of 2. So about, yeah, I basically would have got off a break even, honestly. So that's another one of my rules, that if I add higher and it pulls down to like my break even level, it's either I'm stopping out, I'm getting off a break even, or I'm getting off for like a 1 to 5 cent profit. Just because, now it's like, all right, well, I wouldn't say use the word lucky, but it's like, all right, well, work to my advantage by letting it run enough. And a lot of people say that's crazy. You let it run 50 cents, but see, sometimes you have to be patient with the trade, because right now it's just, it's running based on emotions, as you can see, later on the day, look what happened. It ended up going all the way back down to $2. So say if you did short at $2 and it went all the way up, had a high of 279, at the end of the day it ended up coming back all the way down to actually 182. So, but if you had this much patience, if you had this much patience, you could have held the whole day from, that one position, because, at the end of the day, all these stocks go back down, which is why I'm so short biased. But like I said, I don't like to be in a trade that long, because my mind starts playing games with me. Any little movement up and down, it's like, all right, is it gonna go up? Is it gonna go down? I start thinking too much about the trade. So that's why I have that M3 3-minute rule that I use. Minute 3 more or less is what you want to call it. So yeah, just a all around beautiful trade. Short the pop, cover the drop, nail and bail. TYHT. This one was a stock that I actually traded with my small account challenge. I actually ended up longing this thing. I would have shorted this one at $4, honestly, because it squeezed up so fast. Shorting it at 350, it would have been way too early, because it just started making the move right here. $4 would have been exactly where I would have shorted my position at. As you can see, it went to $4, and it squeezed up to 423, and eventually it squeezed up to 438. And let's just say, you short at $4, and you covered right here. I mean, look what ended up happening. It ended up washing out all the way down to 374. And then later on in the day, it had a low of 321. So sometimes that's why I tell traders, don't. Yes, you gotta cut your losses smart. Don't cut them quick, cut them smart. And cutting it off right here would be cutting it quick. You're not cutting it off smart. Basically it just made a big squeeze up from the low of 286 all the way up to 438. That's a big move in such a very short window. It's basically an airplane running on fuel. Eventually that fuel is going to run out. When it runs out, it's going to come back down. So like I said, that's why my next add up would have been, so let's say if this went up to 450, which is right here. So let's say if it went from $4, I shorted here, and it went to 450, I shorted again. This is candle went up to 450, I would have got filled again. So now I would have had an average of 425. And look, you start counting your M3 3-minute roll. 1, 2, 3. Within 3 minutes of it squeezing up, it's going to pull back. So if I went to 450, I can guarantee and promise you that I would have pulled back to at least my 425 average, where I could have got off a break even and saved my save a loss. But in this case, it just washed all the way down. So I would have shorted about 5,000 shares here at $4, another 5,000 shares at 450. That gives me 10,000 shares at a 425 average, and it washes down to 374. That's a nice big profit right there. So you gotta watch for the whole and half dollar numbers, as there are always going to be magnet key areas to short at, and you can already have your order out there and get filled. So just all around beautiful trade. Like I said, I traded this one with my small account, and traded it with a small account, and just I executed that accordingly from a long bias. I was actually a long bias trader on this because I didn't have the buying power to short the stock, because there wasn't shares available at that time. But yeah, so beautiful trade setup here, guys. RCON. This one it gapped up pre-market, and it grinded up, and it was consolidating. It was basically hanging around this 250 area pre-market, 250, 255 area pre-market, and it was in this little channel just consolidating, going up, coming down, going up, coming down. And I actually alerted in the chat saying that I want to actually look this thing to long it for the break of 255 and get past that 266 level and get to the $3, where I would long it here at 255 for the break of 255 and sell it for the quick pop, and I'd actually look to short it at $3. But it didn't even do that. When the market opens, this thing just dumped right away, and I thought about buying the washout, buying the dip and selling the rib, but in this case I was more short biased with this stock because it had moved up so much. So when you short or long at the open, just in the middle, it's a gamble, because it can either go, it's a 50-50, it can either go up or it can go down. So you want to wait for that confirmation. I never like shorting the break down, I'll long the breakout, but I won't ever short the breakdown, just because you can easily get squeezed out of your position. You know, because 90% of traders are chasers and they chase the stock, and in this case, if this had broke out of here, you're going to get more traders to buy the stock versus shorting the stock. It's a lot harder to short the stock. Well, it's not really, when I say it's harder, it's not hard to short it. It's just not many shares are available to, you know, for everyone to short. A lot of people are afraid of shorting. They don't know how to short. They can't understand the idea of it. So that's why, you know, you're always going to have more traders to come and buy a stock and long a stock than you are to short the stock. So, but at the end of the day, that's why these all go back down, because they run out of fuel, because no one wants to come along and buy them. So with this trade, it dumped, it washed out, had a low of 218 area, and then I saw it started grind back. I saw it started squeeze back up, and I put an order out there at 250. I got filled at 250, and at that point it just came all the way back down at 218. I covered. So again, within that 3-minute window, 1, 2, 3, as you can see, within 3 minutes, you know, it squeezed from 218 up to 250, shorted, and came down. And by that time, by the end of the 3 minutes, I was already out of my position, walking away with my profits. So as you can see, you know, if I shorted here 250 and I'm still holding right here, then I'm breaking my rules. You know, it's not really that 3-minute window strategy that I apply each day when I short these stocks. But you know, like I said, if it kept squeezing up, you know, to if it broke, I short 250. If it broke, you know, 266, it was easily going to $3. Where at that point I would have shorted again at $3, exact same amount of shares I shorted at 250, and at that point I'd have a 275 average within 3 minutes. If it did not come back to my 275 average, which I can guarantee it would have, at that point I would have cut the loss and been out of my position, because I set a timer that either does what I want within 3 minutes, or that's it. I'm out, I'm done. So I don't want to get married to this stock. But just easy executed trade here on RCON. SNES. So when I think of SNES, I think of the Super Nintendo when I was a younger kid. But this stock was actually very interesting. This thing was hyped up on a lot of big news. You know, it was up and down. It was running and it wasn't running. It was, you know, short seller restriction came on, so you get a lot of random squeezes. But this one, I saw a lot of news go on this one. Oh, excuse me. I'm making this video at like 2 in the morning for you guys. But I saw this one just out of nowhere being hyped up on Twitter. They were trying to pump it, and this one it started to squeeze up. And I put an order out there actually at it was actually at $3. I was trying to get filled at $3, but I saw the buying pressure slow down, so I actually dropped my order down at 297, and I actually ended up getting filled at 297. So pretty much I cherry picked this thing right at the very top, and you know, at that point I covered into the wash, and pretty much took my profits to the ram, just because I don't know, the volume just, as you can see, it really disappeared, and it was trading really thin. So this one was just kind of like on the radar that just popped up real fast. This was a quick nail and bail. Shorted the pop, covered the drop. They get married to it. You know, it basically made the trade in less than my 3-minute window here. You know, so that's another thing you have to be careful with, is that, yeah, $3, $3.50, whole and $half numbers are magnet areas, but if you constantly put your order out at $3 or $3.50 or $4, sometimes it won't get filled, because sometimes it runs out of, you know, fuel before it even makes it there. So sometimes it's better to set your, you know, order out there a couple cents before that magnet key area that you want to get filled. So just a little bit of food for thought for you guys. But yeah, this is an easy trade. Like I said, short the pop, cover the drop. At this point, it just started trading real thin throughout the rest of the day, and it slowly grinded up. You know, when you see charts like this, you know, just real thinly traded, don't trade stuff like that. You know, I took advantage of this quick trade. Actually, this was a very small scalp. It wasn't even that big of size and big of profits. So, you know, this was enough profit here for you know, a 4-piece chicken nugget and a small fry at McDonald's. Not even enough to get me a Big Mac. But that was that trade, SNES. You know, looking at the daily chart here, you can see just, you know, just look at this. It closed. Look how many red days it closed. Just a downtrendy piece of shit, guys. And all of a sudden, you know, it gets a little burst of, you know, upwards green candle, and now we're, you know, back to square one. We're gonna start getting some red candles, and eventually this thing will fade all the way back down to the you know, 150 area, no man's land. It's, you know, it's like I said, all these stocks, just because no one comes in here to buy these, you know. You need fuel. For the stocks prices go up for these companies, you need people to come and buy them and hold them and keep buying and buying, but no one's doing that. This thing's just slowly selling off. So, you know, that's why I'm so short bias. MARK. This one, pre-market, was absolutely just beautiful. As you see, pre-market, it was grinding up the whole time, and $4 was the original resistance area, but pre-market it broke $4, and my next area I was watching was the 450 level. And as you see, pre-market started to grind up there, and I was afraid that when the market opened, because it grind up so much up there, that it wasn't going to keep pushing, that it was just going to wash out and just fade the rest of the day. So before the market even opened, I had my order out there to get filled. I already threw an order out there to sell, you know, short sell this stock at 450. Market opened. It squeezed up to high of 454. Blue pass right here, 450. I got filled, my order instantly, and all of a sudden it just washed out. I mean, it just tanked. And within my 1, 2, 3 minute rule, I took my profits. Okay, I actually took my profits at $4, because I was afraid. Honestly, I was afraid that, you know, it could have washed out and then easily turned it back around and started grinding back up. So the grinds, I don't want to get stuck in. That's why I take my profits within my 3 minute rule. You know, so like I said, short at 450. In this case, just dumped, just washed out, and covered those profits. You know, just an awesome easy trade. Like I said, that's why I tell everyone, again, $4, $4.50, whole and half dollar numbers are always key magnet areas. You know, basically the rest of the day it couldn't make its way back up there. You know, it just kind of came down, and then it was pretty much stuck in this channel, you know, between 337, 376. But not even that, it was mainly right here for the longest time, 376, 351, just bouncing non-stop before it slowly faded off. But, you know, as you can see, the market just, you know, it started trade real thin. So, you know, when you see like little baby candles, that's not, there's just no volume. No one's coming in here buying this stock. So everything's right here in the beginning, the morning. That's why you know, I nail, I bail, I'm done the rest of the day. You know, literally within 3 minutes each day, I'm done with the market and done with trading. But just an awesome trade on MARK. You know, looking at the daily chart here, you can see, you know, it's charts like this is what we want. We want stocks that are known for making big moves, big candles, big moves. So, you know, as you can see, I always draw out my, you know, whole and half dollar marks. Occasionally I'll throw out, you know, previous support resistance at, you know, odd numbers, but it's always, you know, $5, $4.50, $4, you know, $3.50, you know, and work my way down. But yeah, that was a trade on MARK, guys. CLNT. So this one was actually alerted to me in the chat by one of my other members. He's like, hey, take a look at CLNT. It's grinding up. You know, pre-market, it was just, I don't know, it was really thin pre-market. I wasn't a fan of it, but it was grinding up. It went to 450. And I just, like, it just was slowly working its way there. I like big green candles that shoot straight up, not just slowly inch their way up there. So I saw it trading at 350. I'm like, this is consolidating, guys. I'm not really liking it. And all of a sudden, just out of nowhere, we got a quick squeeze to $8, where I put a small scalp order out there, $8, and then it, you know, went to $8.25. I'm like, are you kidding me? I was like, this thing's easily going to turn into a grinder, working its way up, just like it basically repeated itself here. But then out of nowhere, this thing just, basically just opened real low, and I instantly covered my position. I was like, yeah, I'm out. I don't like this one. Stuff like this, I don't like to trade. So as you see, it's very, very choppy, very choppy. There's no real up and down movements compared to other stocks that I really like to trade. In this case, say if I shorted at 750, basically 1, 2, 3 minute rule, at this point I would have been out, because right here, this one had a high of 796. It didn't even go to $8. But I mean, if I did short this, I mean, I could have got out for my average, break even or some sort of profit. But it was just too choppy, too grindy right here. This little consolidation area, these areas right here are areas that I don't like. So you just have to be very careful with these areas right here. So this is stuff you don't want to get in, stay in. You don't want to be stuck in these areas. So remember, always the 3 minute rule window. So either does what you want or you get out. DRYS, the notorious DRYS, Dry Ship Company. This stock made a move a couple months ago from basically $2.67 all up to $100 within 3 days. So this stock is notorious for making big moves and running a lot. However, this is a perfect example, perfect stock that you want to trade very fast, because you don't know what it's going to do. It could really go up, down, left, right, sideways, circles. Is this whatever it's going to do, it's going to do, and either you're going to date it really quick, take advantage of it, or you're going to get married to it, and it's either going to work in your favor or not. I've known guys that lost their entire 401k on this stock, so it could be very dangerous. This was alerted to me in the chat room, that basically, hey, DRYS is grinding up. And I was like, all right, well, in this case, we're way above, 450, so the next area is $5. So I'm like, I'll throw an order out there at $5 to short this thing because it's grinding up, and I'll look to cover right away as soon as it pulls back. And that's exactly what I did. As you can see, it's grinding up, a whole $1.50 number, again, key areas. So it went up to $5. My order got filled, and then this red candle right here, I cover right into the dump of $4.94. So, I took profits pretty quick, but again, I'd rather take them quick than, basically just get greedy and hold on to go back to no man's land, because in this case, you can see it turned around and it broke past the high day of 505 and it squeezed all the way up to 518. It could have easily kept running. I mean, it could have easily kept running. Like I said, look at the daily chart. As you can see, where it's trading 480, you'd be like, whoa, high 79968. Oh, you're like, that doesn't make sense. That doesn't say $100. Well, what's happened is that this company's had so many reverse stock splits, so it's constantly changing. It's constantly having a reverse stock split. So that's why the price keeps going down. But as you can see, basically, I was talking about how it made a move basically from no man's land all the way up, and then it just dropped all the way down, and it's been just grinding down. Eventually, this thing will get delisted, and no longer will be part of this exchange. But again, $5 shorted and covered into the wash, and yeah, just an all around easy, excellent trade here. ANY came out with news and the market opened, and this thing just completely squeezed right up. It just took off like a bat out of hell, and I saw it squeezing up. I saw it blow past, obviously it blew past $3 early, so I'm like, alright, I'm gonna look to short here at 350. Put my short position out there. I got covered. Actually ended up going up to 370 within that 3 minute window. I'm like, alright, I'm gonna look to add at $4. If we get another squeeze of $4, at that point I'd have a 375 average, which would be right here. And at that point, within 1 3 minutes, I'd get out from my break even or some sort of profit, a wash to turn around after that. But it didn't even make it up to $4. So squeezed up from this candle right here. So basically 280 went all the way up to 350. I shorted, got filled, went to 370, and then just washed all the way down to 337, which is where I ended up covering. I took my profits right there. It's just because at that point, when I saw me the big green candle up and I had a big green candle down and big red candle down, and blew past my entry area. At the point I was just like, I'm just gonna take it off, and I took it off, and basically, it pulled down to the VWAP area, 329, and then I saw it just kind of like bouncing up and down like a little channel right here. And I'm like, I don't like this thing. Basically it kept testing this 367 area, where 1, 2, 3 times. Before the fourth time, it finally squeezed up. At that point, I wasn't holding position. I already shorted at 350 and covered. I wasn't gonna look there. The next area for me to short this thing would have been $4. So I saw this thing squeeze up, and if you were a long bias trader, buying the breakout of this previous high at 370 right there would be a good entry if you're longing this stock for the break of the high day and sell towards that $4 pop area. But in this case, I was just looking to short it because I'm a short bias trader, and I actually had my order out there at $4. I'm like, all right, let's squeeze up, baby. We'll get $4. At that point, we'll get a nice washout. But it went up. It never hit my order. My order never got filled. At that point, that's when it just, dumped to 367 and just faded all the way down to basically 302. So that was a little upsetting. I was hoping my order would have got filled up here, and that would have been, obviously I would have held all the way down here because I'd be breaking my rules. But if I got filled at $4, that's 1, 2, 3 minute window. Nice little 40 to 37 cent profit right there, on 5,000 shares is definitely really nice and just really rewarding. So this is 1 minute chart. Let's take a look at the daily chart. Look at the daily chart again. Let me get rid of these lines here. Remove drawing, clear drawing set. So as you could see, again, just been downtrending the whole time. There's just no room for bounce. This is constantly just fading off, constantly making newer lows, and draw a line right here. You'll see that it's kind of making a flag. Eventually, it's going to break down here and just keep going down. So definitely this is just very very bearish. We're just it's never going to work its way back up to $23. Never. There's no buyers coming in to buy this thing. But yeah, that's it for ANY. ACHV. So this was the ultimate perfect chart setup. This is exactly what we look for day in and day out, and this is what we come to the stock market looking for, both as long bias traders and short bias traders. Because let's say you were to trade this on the long side, you could easily long this for the $3 break and sell into the quick spike. But in this case, I shorted this stock. So this stock, I was alerted this stock running on my scanners, and the guys in my chat were also alerting this to me as well. And when I looked at it, it blew past $3. And I'm like, all right, well, what's my next key magnet area, which is 350. So I put my order out there at 350, and it instantly got filled. Once it got filled, this next 1 minute candle, so I started applying my 3 minute rule, 1, 2, 3. Within the next candle, not even enough time, next candle, this thing just completely dumped. It had a low of 291. It washed out all the way down, but I covered at $3. I covered at $3, and then I saw it squeeze up again. I'm like, all right, I have another order out there at $4, hoping it was going to get filled, but it went to a high of 385 before finally it just washed out again and just faded off the rest of the day. But just an all-around perfect, easy trade. awesome money, easy money. Basically, you could put my order out there manually, and then I use my hotkey to cover my entire position right away, and then I'm instantly out. So just, again, this is what we come to the market for each and every single day. And these are the perfect trades that, basically, look at this one, right here. So this is 1, 2, 3, 4, 5 candles. So, your day's pretty much done within 10 to 15 minutes. And then before the market, like I said, just pretty much dries up and starts to get real thin and real choppy. So right there, that's where all your volume's at. All your volume right here, that little morning action again right here. This is what we're looking for. That volume, this morning action right here, each and every single morning. Whether you're a long bias trader or short bias trader, you can make money on the way up, and you can easily make money on the way down. It just depends which one you're more comfortable with. Me, I will always be short bias trader, because at the end of the day, when you look at the chart, all these stocks are going back down to no man's land, where eventually they'll be delisted. So with that being said, that is it for this chapter, guys. And I will see you guys in the next chapter. Chapter 10, Closing Words. Check yourself. You cannot come to the stock market having an ego. You cannot have zero emotions. Never get cocky or overconfident in day trading. The market is always right. Hold and hope is never a strategy. Too many guys, too many traders that hold and hope when they're in a trade, and that never works out. The more you fight the trend, the more you stand to lose. Be careful. It's very easy to have patience when wrong than when being right. Too many day traders, when they're right, they cut it off fast, but when they're wrong, they hold on to it forever. They hold and hope. And I tell them, why don't you cut it off? They're like, well, I'll just see what happens. Another 10 cents, and then another 10 cents, then another 10 cents, and then the next thing you know, they're like, oh, I wish I would have cut it off there. Let's just, hopefully it gets back to that point, and then it doesn't. So always be very careful. Never get too cocky or overconfident. You cannot have an ego. Stay cool. My favorite saying is always stay calm, cool, and collect. Be patient. Let the trade set up. You have to be a sniper. You have to just sit there and sit on your hands sometimes and watch what the stock does, or what the stock market gives you. You don't, just learn to walk away from your computer. If it's not giving you what you want, get up, go for a walk around your block. Just, go run on the treadmill. Or if you're in a trade, and you have profits, why not just be done for the day? If you made profits for the day, if you made profits within 10 minutes, why not just cut it off? So many guys sit there and they keep trying to, it's like playing baseball, they hit a home run, but yet they want to hit another home run and another home run. It's like, well, you already hit a home run. Why do you need to hit another one, So you already beat the market, so just take your profits and be done for the day, or if you had a loss, let's pretend you had a loss. Do not try and revenge trade. Someone will have a $200, I'll have traders that I see have a $200 loss. Just cut it off for the day. Just be done. You need to clear your head. Go to the gym. Go work out. But, they try and make that $200 back by, pressing more size. And that's always a bad idea. In and out. We nail and we bail. We get in and we get out. It's always good to know what you're trading when we nail and bail. Is there FDA news? Is it good news or is it bad news? Is it earnings? Is it delistings? What is it? Always know what you're trading. Always know why you're trading it. Always know where you're getting in and where you're getting out. And execute your plan according to plan. The 3 P's. Prepare, plan, and profit. Always follow the 3 rules. Prepare, plan, and profit. Prepare your position size. Plan where you're going to get in, where you're going to get out. Boom. Profit. Take your profits, be done. Walk away for the day. Less is always more. What I mean by that is sometimes having less size equals to more profits because you have more patience to let the trade work out in your favor. You trade what you see. You have to be robotic. Very, very robotic. Too many guys, you know, it's just, they have too much emotions involved. And what I mean by robotic is you can't, if you're about to enter a trade, too many people think about entering the trade. You can't do that because you'll miss the trade and then you get in at a later point. Being robotic, it's like a natural instinct. It's like you just know, you just enter the trade. No one has ever gone broke taking profits quick. It's not a bad thing. Some people will say, oh, you took profits too quick. You should have waited longer. Well, you didn't know what was going to happen. I'd rather be quick than wait too long. And it's like, well, shit, I wish I would have took profits quick. So always locking those profits right away. You know, can never have emotions. Never, you know, second guess or have emotions or think twice about things. You know, because at the end of the day, we want to start with a clean slate each and every single day in the stock market. You know, let everyone else hold a position overnight and, you know, think about the position, or be in a losing position, and they're thinking about their losing position, if it's going to gap up the next day, or, you know, how's the stock going to play out the next day. You know, I'd rather, you know, sleep like a baby, I'll snuggle like a bug, knowing that I have a clean slate. I don't hold any positions overnight. Your day trading plan. What is your plan? What is your long-term goal? Do you want to be a part-time trader? Do you want to be a full-time trader? Do you want to swing trade stocks? Or do you strictly just want to, you know, come to the market and day trade every single day? What do you want to do? You must know the answer to that question. I cannot tell you which one to be. To be a part-time trader, be a swing trader. Write down your plan, stick with it. If you want to be a part-time trader, then just trade, you know, part-time, do it. If you want to be a full-time day trader, do it. You know, at the end of the day, just be happy with your decision. You know, grab the bull by the horns and just run with it. Building your account. Be patient with building your account. I tell everyone, imagine having a Swiss Army knife and you need to build a fire. Well, you're not going to take that Swiss Army knife and try and stab a tree, a tree trunk, and get big pieces of wood to start your fire, because if you do that, you're just going to break your knife, and now you're not going to be able to have a fire at all. So the best way to build your account is slowly cut small pieces of wood off that tree trunk. Just keep cutting little pieces of wood, little pieces of wood, little pieces of wood, and get that fire going, and then boom, you got your fire going, which would be your account size, and go back to cutting more pieces of wood, another pieces of wood, and all of a sudden, boom, a big piece of wood falls off. You're like, oh, that's pretty cool. Look at that, I got a big piece of wood. I was aiming for a little piece of wood, but now I got a big piece of wood. So you have to treat your account like that. Slow and steady wins the race. Do not compare yourself to others. Just focus on your account and your trades only. Beginner's luck provides false sense of security. I see it all the time. Just people come market, they make their first trade, they have a couple hundred in profits, and then the next trade, a couple hundred, and the next trade, and a couple hundred, and then all of a sudden, boom, they have one big loss, takes them out of the game. So, just be very, very careful, Don't make changes to what's been working for you. Just be consistent. Slow and steady wins the race. Practice, 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 practice. Practice makes perfect. If you have to practice with paper trading, so be it. Go do it. Go sign up for a paper trading account for a month. Paper trading can be a lot of fun. It gives you, different ways to try different things, or indicators, you name it. It's actually, it can be a lot of fun. I encourage everyone to go to paper trade and, learn how to use hotkeys and, practice with different sizes and, size positions, and scale in and scale out. Prove it to yourself. Prove that you can do this and be consistent with the strategy. Start small with size and gradually increase. Don't go 5,000 shares in. Start with 500 and then increase to 1,000 and then 2,000. So just start small, work your way up. Stop worrying about what other guys on Twitter made on the same trade you took. Who cares if you only made 50 bucks and they made 500 bucks, or they made 5,000. Who cares? You don't know their history. They could be a millionaire. They could have millions and millions of dollars for you, and they just don't care. They're gunslinging it. They're just reckless. So just focus on you and you only. And if you have to block them from Twitter, then block them. Just ignore them. Taking profits. New traders have a tendency to go wild when starting to trade. They just go gunslinging. and they just have no emotions. You need to control profits just like you can control a loss. You never know where the stock is going to go. It can go up, down, left, right. No one knows. Not Warren Buffett. No one knows where the stock price is going to go. That's why we nail and we bail. We get in, we take the meat of the move, and we get out. You know, if I get out and it keeps going, it's like, oh, well, if I held on, I could get another couple hundred. Who gives a shit, you know? There'll be another trade like that tomorrow or the next day. So always be satisfied with the decision you took. You know, like I said, small profits will always add up fast. Just keep taking small profits, and then you'll be surprised how fast they add up. Focus on what you're good at. What type of trader are you? Me? I'm a short bias trader. That's what I enjoy. That's what I like. That's what makes me happy, and that's what, you know, I do day in and day out. Are you better at longing stocks? Are you more comfortable at longing stocks? Are you good at shorting stocks? Are you more comfortable at shorting stocks? You know, have a set risk and plan prior to entering a trade. It's okay to miss a trade. There's a lot of trades I miss day in and day out. So that's like, oh well, I wish I would have got in this trade than the trade I was in. So, you know, just don't worry about that. You know, there'll always be another trade there. But that being said, you don't need to trade every single day. There's some days where I'll just be like, you know what, I don't see anything, I'm not trading today. Or, you know, something will happen. Well, I'll come to the market, you know, ready to go, planned, prepared, ready to profit. And at the last second, I gotta shut down my computer because I gotta go pick up a friend or family member at the airport. It just happens, you know. I'm not addicted to it. There's no emotions. Basically being robotic, and that's how you gotta be. Final words. As always, no emotions, guys. You cannot have any emotions at all. This is a dirty game, a very, very dirty, cutthroat game. Don't trust anyone. If someone tells you to look at this stock or buy this stock, just like I said, be very, very careful. You have to be numb. You have to be very, very numb. And what I mean by that is, you always have to be so numb where, you know, you don't think about entering a position. You just do it. You just do it, and that's your plan. And you're trying to profit, and that's it. You're done. Come to the market expecting to make nothing. If you come to the market with expecting nothing, and you know, it's just a lot easier process to expect nothing. Trading with scared money is no money. Too many people come, they're like, oh, you know, I can't lose this $500. It's a horrible idea. It's not going to work out for you because you're trading with scared money. You have to come to the market being like, all right, well, if I lose this $500, I don't give a shit. It's not a big deal. You know, so trading with scared money is no money. People that make money spend money in order to do that. It's true. In order to make money, you got to spend money, and that's how the stock market works. So with that being said, you know, don't be a sheep. You know, too many guys out there, too many people, they're sheeps. They just follow, you know, one another, and you know, instead be the wolf. Be the wolf that's, you know, he's his own leader, and he's just running with his own pack. But thank you guys. That's it. That's the final chapter to this DVD. I hope you enjoyed it. Hope you liked it. And again, thank you so much for purchasing it.